Good afternoon to those of you that are coming on with us for understanding cryptocurrency and blockchain. We are very happy to have you with us for this lunchtime opportunity to have a learning moment. And we're going to give some time for the many people who are coming on to join. And then we will begin in the next couple of moments. So please just bear with us. But thank you for joining us. Once again, for those that are just coming on to the Understanding Cryptocurrency and Blockchain, thank you for joining us today for this Ramaz alumni webinar and an opportunity to learn about a topic that we know is of interest to so many of you. Please just give us a couple of more moments to allow people to come on, and then we will begin. The lunchtime conversation. Okay, well, good afternoon, everyone. It's wonderful to have so many people here during this lunchtime moment. And we want to recognize and thank everyone who considered coming on today, and those who are listening. Since we are recording this on a recording, we're happy that you are taking out the time to listen to this on a topic that so many people have expressed interest in over time. Ramaz current parents, alumni parents, and we want to, on that note, thank Leah Fellner, who helps to coordinate this whole webinar and many of our webinars. So thank you to you, Leah. So today we are very privileged to have sponsoring this program. It's sponsored by Connie and Zev Shimko, class of 09, in memory of David Hendel, Zichrono Livracha, and by Crypto Asset Rating Inc., in memory of Harold Walensky, who was an amazing entrepreneur. And a very, very special shout out to Bonnie Silvera in all of this, since it was Bonnie who conceived of our having this and really encouraged us to have this kind of a webinar. Today, we are privileged to have Zev Shimko, class of 2009, who is the co-founder and the chief operating officer of Avanti, which is a digital asset-focused bank. Zev is someone who has been associated with the school for many years, obviously as an alum. He was formerly a director at Figure Technologies, focusing on its enterprise blockchain efforts. And before that, he headed corporate development at SALT, which S-A-L-T, a crypto-backed lender. Zev started his career at Morgan Stanley in global capital markets, where he was promoted as part of its STAR program, which recognized top-ranked analysts globally. After graduating Ramaz, Zev got his BS from Northeastern University, pardon me. We are very, very proud to have Zev returning today as a Ramaz alum. Bonnie Silvera, who I mentioned a few moments ago, has over 6 years of experience working as a risk advisor for Ernst & Young. And in addition, she has experience in the daily management of the market risk of a business unit engaged in energy trading. She also worked part-time as a finance associate at iTrek, a nonprofit organization in Midtown Manhattan. Perhaps for many of you, she is best known for having managed the Ramaz Parent Council finances as our treasurer and secretary, treasurer. She was an outstanding treasurer and leader in many, many ways. She also served as the secretary of the CEAA. Bonnie graduated from Columbia Engineering with a bachelor's degree in applied mathematics and is certified by Emeritus in applied machine learning. She currently works as the Vice President of Rating Services at Crypto Asset Rating. We are also very proud to have, as part of Bonnie's resume here at Ramaz, her amazing children, Francesca, who's in 5th grade, Mayor, 7th, and Bianca in 9th grade, who started our high school. So we give a shout out to all of them as well. We thank all of you who joined us today, and I now hand this over to Zev, who I am sure is going to wow us with all of this information. Again, thank you all for being on with us today.
Great. Appreciate the kind intro, Kenny. Thank you, Bonnie, for thinking this whole thing up. And thank you, Leah and Kenny, for inviting me to join today. I do have some slides that I believe will be shared momentarily, but I did want to start briefly with a bit of my personal background and career since leaving Ramaz and Northeastern. It's funny, my father went to Northwestern. My grades weren't quite high enough for that, but Northeastern is still a pretty good school. I started my career in investment banking at Morgan Stanley in New York. It was a very structured program, also a very great program, challenging program, and a lot of hours. And over time, I migrated into less structured roles, and I left banking to jump into the startup world in San Francisco. I worked for a couple fintech companies, essentially that provided a variety of financial services without the need for a bank. It was at the same time that I was getting more into cryptocurrency and digital assets myself. I was spending my nights and weekends learning as much as I can about primarily Bitcoin, but also other types of crypto assets. And I finally made the decision that I needed to be at a crypto company to really advance my knowledge and take my career into the direction that I wanted to. And so I went to join a company called Salt Lending, which is based in Denver. And it was actually the first company to lend US dollars against digital assets like Bitcoin. So if somebody had $1 million of Bitcoin, for example, they couldn't go to a bank and get a loan backed by that crypto, right? They couldn't use that to pay for goods and services. And so we offered a program where we would actually lend them money, facilitate the lending of money against their digital assets, while on the back end, monitoring the volatility of those assets, the value of that collateral, and it didn't look too dissimilar to what a securities lending program would look like. After some time, I pivoted my focus to the enterprise blockchain world. Essentially, how do we use the technology behind cryptocurrency for the facilitation and origination and creation of different types of financial assets? And you'll hear more about, blockchain generally and tokenization later from Bonnie and Greg. And about 2 years ago, I left Figure Technologies, where I was at the time, to join a group of co-founders to start the first digital asset focused bank in the US. You'll hear a lot about crypto today. Crypto has seen an immense level of adoption, of market visibility, but there's also a lot of legal uncertainty and regulatory uncertainty. And it's unclear to many large investors how they can get access to this asset in a safe and sound manner. And so we're taking a very regulatory and compliant first approach to this digital asset industry and providing institutional and bank grade services to businesses and institutions that are looking to get into the space. So I did want to start with a high level intro and get pretty basic into what is Bitcoin. And Leah, if you wouldn't mind moving over to the next slide. Bitcoin hasn't been around forever, as a lot of you might know. It actually was created and invented, let's say, in 2008. And the essential service that Bitcoin provides is a mechanism for storing and transferring value in a way that it doesn't rely on existing banks or governments. And in some ways, it was in direct response to the financial crisis. And so currently, if you wanted to send a large payment, if you wanted to send money overseas, you need to deal with financial institutions, you need to have bank accounts, you need to go through various levels of vetting before you even have the ability to conduct a financial transaction. At a high level, cryptocurrency is much more free and open in the sense that if you have the ability to connect to the internet, if you're able to use a smartphone to download a mobile wallet, you can actually get access to this new financial system. You can send money between friends, either within the US or abroad. It doesn't really matter. Bitcoin is not physical. Bitcoin is a digital currency and is sometimes described as digital gold. If you have $1 million of Bitcoin, you can't show somebody that in physical form, right? That might live in digital form on your phone or with a company that you're working with. Because it's digital, it can be transferred quickly and at scale. You can send $1 worth of Bitcoin or $1 billion worth of Bitcoin with the same ease as sending an email. And that's quite powerful. Because if you want to send $5 to a friend in the US, you do have a lot of options. You can send PayPal, you can do a bank transfer, you can send an ACH. But what if you want to send $100 million to a company in Africa, right? That might take you actually a couple of weeks to do in the existing financial system and with the existing rails. But with a Bitcoin transaction, if both of you had a smartphone and a compatible wallet, you can get that value over to them in a matter of minutes, and that might cost you $6 to do that transaction. Bitcoin is decentralized, it's digital, and it's scarce. And I'll get into a little bit of what that means. It's digital in the sense that it's governed by code. There's no overarching government or monetary policy that governs and restricts its use. The rules of Bitcoin have been established and cannot be altered unless a consensus reaches certain decisions. It's decentralized in the sense that it's run by thousands and thousands of computers, meaning that there's no single source of truth. Usually you have a single bank or a single company with a centralized database, and that bank or that company gets to tell you what your balance is, and they are responsible for maintaining the integrity of that balance or the validity of your transactions. In Bitcoin's case, because it's driven by technology and it's distributed across thousands and thousands of computers, you essentially have this shared source of truth and a shared ledger. And so it does not rely on a single database or a single point of failure. And so if, for example, 1,000 of those computers were compromised or were hacked, well, you have tens of thousands of computers that can ensure the ongoing validity of that system. And then it's scarce, which is a really important component when it comes to money. Obviously, we've dealt with issues around inflation and printing here in the US with the dollar. By code, Bitcoin is limited to a maximum number of 21 million Bitcoins. Now, that doesn't necessarily mean that you need to own or buy one full Bitcoin. It's fractional to the 100 millionth decimal place. So you can buy $1 or $2 worth of Bitcoin, but there will never be more than 21 million Bitcoin in circulation, which does ease some folks' concerns around various monetary policy that we've seen in the US and in other countries. And in summary, Bitcoin is secure, trustless, and global. You might see headlines about certain companies being hacked or somebody being held ransom for a Bitcoin payments. But I do want to reiterate that the Bitcoin protocol, the Bitcoin blockchain, the technology behind Bitcoin has never been hacked. It is secured by thousands and thousands of computers, and it would be extremely costly and very improbable for that system to be hacked. And I think that's an important point. When you deal with companies that try to take control over certain pieces of the Bitcoin industry or over certain financial services, companies can always be hacked. People can always make mistakes. But when you have code that is distributed across tens of thousands of computers across the world, it's very difficult for that type of system to be hacked. It's trustless in the sense that you don't need to rely on an individual or a counterparty on the other side or trust their word that they sent you money or that they receive money from party A or party B. Everything is visible on what's called the blockchain that we'll get into in more detail. But it's essentially, again, this shared ledger that I mentioned that is reflected across these thousands of computers that are participated in the system. And so you have extreme visibility into the status of your transactions, into the visibility of where your transactions are. If I want to send $1,000 to Bonnie in Bitcoin, I can send that payment. I can then look at what's called a blockchain explorer, and I can see that $1,000 worth of Bitcoin went from my address to Bonnie's address on the Bitcoin blockchain. And you can't do that with existing US dollar rails. If you want to send a wire, right, you might send instruction to your bank, but it essentially goes into a black hole anywhere from 15 minutes to 24 hours before the Federal Reserve will confirm that wire on the other side. An ACH transfer can take up to 3 days. It can also be reversed up to 90 days. Again, you don't have that same visibility and auditability that you do with the blockchain network because it is an open and transparent system. And so, Leah, if you wouldn't mind going to the next slide, I did want to try to show an easy example of what a Bitcoin transaction looks like and what actually happens, because there is a lot of complexity when it comes to the Bitcoin protocol. It's not a simple technology, and depending on the blockchain, right? And right now we're just talking about Bitcoin. It can get very, very, very complex. And so what's happening behind the scenes? What happens if I send a Bitcoin transaction? That's a lot easier said than done. So at a very high level, you have two parties. Party A has Bitcoin, and they want to get Bitcoin to party B. What's really happening is that there is a balance of Bitcoin that is associated with a variety of what's called private keys on the Bitcoin network. And essentially, if I want to transfer some of my Bitcoin to another person, I am actually transferring a balance of Bitcoin from me to them. That transaction or that script is broadcasted to the entire Bitcoin network. All of the computers that are working to verify transactions and ensuring the validity of the Bitcoin network see that transaction, and each one of those computers are verifying the integrity of that transaction, meaning, as an example, that I have the balance that I say I have, and that I am actually sending that Bitcoin to another party, and that they are actually receiving that Bitcoin. These computers that I'm talking about are sometimes referred to as miners, or if you've heard the term mining, they're essentially mining for Bitcoin, because in exchange for the services that they're providing to the Bitcoin network, which the general service is the verification and validation of these transactions, the miners receive Bitcoin in reward. And this creates this positive incentive loop and incentive mechanism where all of these computers are actually incentivized to play by the rules and to ensure the integrity of the system, because the only way to recoup your cost of mining, which at a high level is consuming energy and is costly, is to receive Bitcoin as a reward. And so you have thousands and thousands of computers all verifying these transactions, all trying to solve what's known as a cryptographic problem. And one winner every 10 minutes will actually earn new Bitcoin. So I did want to provide the high level explanation of mining, which certainly can get more complex. That transaction, so my transaction of Bitcoin that I'm sending to somebody else, or the block of transactions, right? So every 10 minutes, all of the transactions around the Bitcoin network are essentially included in a block. And that block is verified, validated, and stored on the Bitcoin blockchain. And over time, you have this blockchain of blocks that essentially has the entire history of the Bitcoin system, right? Every transaction that has ever happened is recorded in the Bitcoin blockchain. And that's where we get the term blockchain, right? And in Bitcoin's case, it's a transfer of information where that information represents a Bitcoin balance. But that information that's being sent around can be anything. It can be financial assets, it can be Ethereum, if you've heard of Ethereum, or other types of tokens or assets. As blocks are updated, the current state of the blockchain is then distributed and verified across all participants. So now again, you have these thousands and thousands of computers all in sync, all agreeing that the current state of the blockchain is intact, and now all agreeing that my Bitcoin went from me to the person I sent the Bitcoin to. I did want to zoom out a bit on the next slide and talk a little bit about the market today. And so Bitcoin is not just a small fad anymore. The entire Bitcoin market cap totals $1.1 trillion. And if any of you are following Bitcoin specifically, the current price is around 60,000 US dollars for a full Bitcoin. 10 years ago, it was $1, right? And so obviously there's been this extreme appreciation in the price of Bitcoin, much of it due to speculation, no doubt, but also due to the perceived utility of a system like Bitcoin and what it can mean as a new global payment system. I just found the stat the other day, which I found quite surprising, but about 22% of the population in the US owns Bitcoin. That's a pretty staggering number. And obviously that number is different depending on which group you survey. I did see a stat that almost 80% of millennials own Bitcoin. And so when you think about, the future, where this goes in 20 years and 30 years, maybe even in 5 years, you see this increased adoption of digital currencies. You see increased utility of digital currencies. Holding Bitcoin is great, but it's not really great if you can't use it anywhere. If your stores won't accept it, if you can't, invest directly in it, if you can't use it to pay for goods and services. And so that utility has been increasing since 2008. There are tons and tons of companies working on Bitcoin adoption, Bitcoin services, and broader blockchain and cryptocurrency products. And I do think the next 5 years is going to be an incredible time period for the space. I did want to throw some recent headlines out there that I found in the past year, just again to reiterate the adoption of Bitcoin and cryptocurrency generally. I might just highlight one for now, which is El Salvador. The country of El Salvador deemed and has made Bitcoin a legal tender in its country, which means that if you are in the country in El Salvador and you go to a cafe and you want to buy a cup of coffee with Bitcoin, they have to accept your Bitcoin. It is legal tender in that country. And the government, and some of you might know that Bitcoin is volatile, right? It's not as stable as US dollar. And so the government has provided a guarantee that they will actually purchase any Bitcoin from those merchants at market rate, so they're not subject to the volatility. And essentially, El Salvador sees Bitcoin as a new reserve for that country because, as you know, they've been relying on the US dollar. Maybe just to go to the next slide in the interest of time, Leah, and the next 2 slides, I want to provide just a super high-level overview for what we're doing at Avanti. We are institutionally focused, and we are building a regulatory and compliant-first bank for the digital asset ecosystem. There are large institutions, there are large players that, in order to get exposure to an asset like Bitcoin, need to do so in a regulated means. They need the legal and regulatory protection, and they need the operational efficiencies of dealing with a bank when it comes to things like settlement risk. And so at a high level, we're simply a bank that can provide both US dollar and crypto services. There's no bank right now in the US that can directly provide crypto services. And so we're hoping to be the first. We have a lot of other cool products on a roadmap that we intend to launch. But in 6 months at launch date, we should be able to provide US dollar services to businesses and institutions. And later in the year, we will layer in digital asset services. So our customers, as an example, if they had $5 million of US dollars in their account, they can then use a portion of that to buy Bitcoin, which we will also hold for them. So they don't need to use services or work with companies that are more loosely regulated, where it might be unclear what the treatment for digital assets is, where you don't necessarily have visibility into the balance sheet of the company, or they don't go through regulatory audits. And so in many ways, dealing with a bank is safer, and we're building a business geared towards the institutional world. So with that, I'll conclude. I'm happy to answer any questions as a follow-up. I did include my email on the slide, and I'll hand it over to Bonnie and Greg to lead the second half of this discussion.
Okay, I wanted to thank you, Zev, and I wanted to thank Kenny for giving me the opportunity to speak to the alumni. I know we like to joke that I would have never been accepted to Ramaz, so I'm really honored to be here as a parent and as a member of the community. And I'm honored to talk about an industry that I recently joined, but has totally captivated me, both in its technologies and in its possibilities for the future. Here to help me talk about Bitcoin technology, blockchain technology, and its applications is my team member, Greg Hilsenrath. Greg lives in Manhattan Beach, California. After achieving a bachelor's degree in economics, Greg spent about 7 years as a stockbroker and venture capitalist before settling in for 20 years, building and selling technology solutions for the federal government. In 2016, Greg went back to school and earned a doctorate in psychology and organizational management. In 2019, Greg teamed up with Crypto Asset Rating to consult, promote, and sell cars, real estate, and securities offerings. Greg is a certified blockchain expert and a certified cryptocurrency trader through the Blockchain Council. He is currently working on an entrepreneurial business certificate through California, Berkeley, and has been trained in Six Sigma and executive coaching. Greg?
Once again, what I was just saying was thank you so much, Bonnie, for the introduction, and thank you so much, Zeb, for doing a lot of the heavy lifting here. It's going to really help out my portion of this. I want to make sure everyone can see. Is presenter view given over? Hello, Bonnie, or?
Yeah, Greg, you can just share the screen.
Can, there we go. Okay, great. Again, thank you for having me. I certainly appreciate the time to spend with you guys and give you a nice overview of blockchain, cryptocurrency, and tokenization. Again, what I'm going to do is I'm going to pull back the curtain just a bit and talk about the underlying technology a little bit more, and then we'll circle back around on how this technology is the contributor to cryptocurrency and tokenization, which we'll talk about. What I like to do, which works well for me, is to kind of talk about my crypto journey. And I believe most people I talk to have some sort of crypto journey where they start with buying Bitcoin. And this could be a lot of the play, excuse me, where many of you are. Maybe you bought Bitcoin and you're curious how it works and how it's used. After you invest in Bitcoin, you start realizing there are thousands of other coins that are all doing all kinds of things, other digital assets, and what they are and how are they used. And with my journey, I saw what was going on. I needed to learn what else this market had to offer. Finally, after understanding very little, I wanted to understand what the underlying technology was all about. So what is blockchain? And we'll talk about that. After you understand the technology a bit, you start to wonder, how is this being used? How is this being used in business? And how can this be used in my business ventures, which I like to talk about the most, which are venture cap and real estate. And finally, how do we, or in my journey, how do I get my own coin? How do I go public with a coin and get a tradable asset of my own? And we'll hopefully not go too fast and cover all of this. Not too similar, I'm sorry, similar to my journey is we're going to follow the agenda. We're going to talk about what is blockchain. We're going to jump right into some examples, supply chain, philanthropy, real estate, and investing. We'll bring it back to what is cryptocurrency, how to tokenize. Bonnie will come back on to talk about a few other services, including our rating services. And then we'll give some final thoughts and hopefully answer some questions. So to jump right in, what is blockchain? And to put it simply, blockchain is technology that powers all 15,000, maybe plus 15,000 cryptocurrencies today, and the ones you heard of and we talked about, such as Bitcoin, Litecoin, and Ethereum. What you may not know is that 81 of the top 100 companies in the world, including Microsoft, Apple, Amazon, and Walmart, and I'll give a Walmart example today, are utilizing blockchain technology right now. So blockchain technology is broken up into three parts. I look at it as, first part is the network, which we've discussed a bit, moves data securely at internet speeds. It's an operating system, and just similar to Apple operating system or Android, where you can use apps, build apps on the operating system, exchange ideas, and do what you need to build the applications necessary to run on blockchain. And finally, it's also a database, which is encrypted, indisputable, immutable, and records every single transaction. And this is a little bit what Zev got into about how everyone's updated on the blockchain instantly. And I'll talk about how this works in business applications. So what do we do with this technology? Well, we store the value of anything, and it could be tangible, such as your house, a car, or intangible, such as investments, loans, or even intellectual property. Blockchain enables you to trade those assets for anything else of value. And of course, with the database and what we've discussed a couple of times is that we can track the value. Everyone that's on a blockchain is completely updated instantly. Finally, the advent of the smart contract with Ethereum in 2013. And what this really changed the playing field quite a bit for blockchain. And what smart contracts are, and I'll get into some examples very shortly, It truly is artificial intelligence that can act as a legal contract holder and a legal executor, just the same way a lawyer or bank would do. The two industries that's disrupting this the most is the banking industry and the real estate industry. And finally, blockchain is available right now. It's, again, 81 of the top 100 companies are utilizing blockchain. You can use the operating system, the network, and the database available to everyone right now. And the best part about blockchain, it's not owned by anyone. It's not trying to make money off us. It's actually, blockchain is actually trying to help us make money. And it's free and available the same way the internet's available today. We're going to jump into a quick example. And what we're going to do is talk about, we'll call him Greg the Grower on this, on the supply chain, but what I'm going to talk about also, and then I'll get into the example, is in 2017, IBM and Walmart started a blockchain food and safety program called Food Trust. And the whole idea of this was to better trace the food, better food traceability that could help save lives and protect livelihood of farmers by acting faster. And I'll go through a real quick trimmed down version of a supply chain. When 2017, when the intention was obviously to handle an outbreak of a foodborne disease and to redefine a supply chain in a new way that things can be reconciled instantly. So basically, in the example of mangoes from Colombia, the grower would literally pick the mangoes off the tree, put them in their bag, and send them off to the manufacturer. As Zev said so well in the first part of this presentation, is that once the grower puts the mango in the bag, everyone on the blockchain is updated. So there's no confusion, there's no question where the product is, how it's getting from A to B, how long it's taken at each stop. So I'm just gonna jump to some results of this revamped blockchain supply chain. And the first thing that came out from this was that Colombian mangoes tracking times went down from 7 days to 2 seconds. Literally, it was basically instantaneous to know if there's any break in the supply chain, if things are delayed, or if anything is damaged. The second part about what blockchain fixed is that you only have to shut down one slice of the supply chain. So if we find out, in the old way, if you find out at the retailer that the mangoes are destroyed or not good, you have to shut down the entire supply chain, figure out which part caused the issue, and it took 7 days to do this. Now, if there's a problem, instantly the problem is resolved. If there's a problem with the manufacturer, everyone is updated and knows instantly. Now, when you are able to do this, recalls are minimized or even recalls are eliminated completely because you don't have to wait to find the final product at the retailer is the problem. You will find instantly, so you don't even have to have recalls. You just shut down that slice of the operation, fix the problem, and you're up again running. And what does that mean? This obviously improves overall quality with the accountability and transparency of this blockchain. It saves money, and you can imagine what it would take to shut down a supply chain for 7 days. In 7 days instead of 2 seconds, how you could save money. And in the case of an outbreak of a disease, of a foodborne disease, you literally will save lives. Again, 7 days to 2 seconds. And what I think is one of the coolest parts about blockchain is that when you go into the retailer, there should be a barcode on that mango that lets you, the consumer, see every stop on this blockchain. And you can literally give a tip to the grower. There should be a wallet address for everyone on this blockchain where everyone's updated, and you can literally give the grower a $1.50 worth of Bitcoin to say thank you. Moving into our next example, philanthropy. And philanthropy is another supply chain built that blockchain comes in and can really tighten up and streamline. And some of this example may look very familiar. If you're a philanthropist, here we got Phil the philanthropist, and he has to go through all kinds of middlemen, lawyers, governments, banks, and by the time his donation actually gets to the receiver, there's not even 100% way to be sure that all the money went where it's supposed to go. I'm just going to jump into some of these techniques we use to revamp the supply chain. The first one we did is we implemented a smart contract, which basically says the giver can donate its money, and the money is locked in the smart contract until the supplier agrees, the delivery makes the delivery, and the receiver receives the goods. When the receiver receives the goods is when the payment is unlocked and everyone is paid accordingly. So this gives ultimate transparency. From the example before, and this works as well here, is that every stop along the way, there is transparency. You know exactly when the supplier makes the delivery, when the receiver receives their good. There's no chance of anything to be confused or lost or wondering where money might be. 100% transparency. Next part is accountability. Everyone is completely accountable once again. And look at the same example. If we're sending medical supplies across borders, we'll know that exactly how long the medical supplies are here, what the situation is, where the delivery is, and everyone on the blockchain is updated to be 100% accountable. What does this all mean? Which is one of the most important pieces of philanthropy that we need to have is trust. Again, if something is altered in the process, if the process stops, there's instant discovery, instant accountability, and instant transparency. Our next example is in the real estate industry. And I like to look at what we have to offer in two ways. And one of them is streamlining your business, which you can look here. This is an actual project I'm working on in New Jersey. And what this company wanted to do is they said, how can you help me? I'm not following this technology. Just show me what you can do. And this is a very familiar home buying process. Starts with an application for a loan all the way to bringing a cashier's check to the closing, which sounds very archaic to me these days with blockchain technology. So this is what we can walk in and do. First thing we did is we got down to almost zero paperwork. We're able to track, record, and transfer land titles, property deeds, and leads all on the blockchain without having to worry about the authenticity of any of the documents. It is authentic through the blockchain. We know exactly where, when, and how long things sit. If it's paperwork, if it's money, whatever the case may be, we know exactly where things are and how long they're there and where they should be. So everyone is accountable once again. And that being said, everyone has the same data. This ensures documents are accurate and everything is always verified. Add all that together, you get absolutely minimal transaction fees because you're actually taking out some responsibilities of bankers and lawyers. The second part about real estate I'd like to talk about is what Crypto Asset Rating has built as a service product, a blockchain as a service real estate product, where you can literally build a REIT, any real estate project on our real estate as a service product. And what this basically means you can do is you can have unlimited liquidity terms, buy and sell your shares whenever you want, or at least follow some within the rules or guidelines of the law. So again, this is a real estate project that can be completely streamlined, and then you can do a public real equity investment, such as a REIT or a REIT product, which is up to you to be creative and innovative in how you want to manage your real estate project. So how does this all come back to cryptocurrency? And some of the things that Zev talked about of what cryptocurrency is: digital cash, money in digital form, more liquid than dollars stored on computers and phones. What I'm adding to this is cryptocurrency is also the value of the tools, the business that anyone can invest, store, borrow, loan, and trade on the blockchains. And to give it back to my examples, what that exactly means, it's the network used on that supply chain. It could be a cryptocurrency. It's the international currency used by the philanthropy that we talked about. And it's the value of that real estate project. So this is what cryptocurrency is. It's the actual digital value of your blockchain solution that is tradable, storable, and you can utilize as a bank where you can borrow and loan. And Bitcoin, it's just simply, not simply, but very straightforward. It just was the very first blockchain technology that started in 2009. So tokenization, and this is where the process of converting something of value into a digital token. So you have a real estate idea, or you're revamping your supply chain, and now you're looking to make some more money off it. Well, now it's time to tokenize. And we tokenize through what we call a securities token offering. And this is one of the great ways to take a company public, use a private offering or public offering to support your business. And what an STO is, I don't know if some of you may have heard of what an ICO is, which is initial coin offering. STO surfaced as a reaction to lack of oversight. So basically, an STO gives you a new way to bank, gives you a new way to invest and raise money, and this is through public offerings that you're familiar with, such as a Reg A, Reg B, etc. The difference now is you're a worldwide bank. You can communicate and you can invest and take investments from all over the world. The smart contracts acts as lawyers, banks, and contract holders, and legal authenticators and executors. So again, we're going to save all kinds of time and money eliminating these factors. This will make it faster and cheaper and more secure. And the bottom line is also you have all kinds of new liquidity options you didn't have before on your terms in large and small denominations worldwide.
So thank you, Greg. We can see why people call blockchain technology the market disruptor. As of November 2021, there are over 14,000 cryptos according to CoinMarketCap, and this keeps growing every day. There are 431 exchanges. Market capitalization for crypto is currently 2.6 trillion USD, but we expect by 2025, the market will increase 10 times over. Forbes in 2021 approximated that the total assets globally was valued at 431 trillion USD. And we expect in the next 20 years, these remaining assets will be tokenized. So with this many tokens out there, how do we distinguish the bad from the good? At Crypto Asset Rating, we group tokens into 4 categories. The first category is securities. Securities derive their value from an external tradable asset, such as stocks or real estate. Examples of a securities token is Overstock or Aspen Coin. The second category is utility tokens, gift cards. When a company creates a utility token, it is essentially creating a form of a digital coupon that can be redeemed in the future for discounted fees or special access to a product or a service. An example of this is the turnkey utility token. I say this carefully because it is important to distinguish between a security token and a utility token, because how you categorize the tokens will affect how the tokens are regulated. The next category is stable coins or central bank digital currency. These are coins that are pegged to the USD, to precious metals, or to gold. Examples will be Tether or USD coin. And then our final category is commodities. We say commodities are 100% decentralized tokens without an issuer. The CFTC and the SEC consider Bitcoin and Ethereum Ether, their token, to be commodities. So these are the 4 categories that we use to categorize the different types of tokens. At Crypto Asset Rating, we provide ratings for security tokens. We have designed a structured, comprehensive rating algorithm that's based on 125 parameters from 15 categories. We look at 4 broad risk categories: business, legal, technology, and financial. In addition to in-house rating experts with varied domain expertise, we measure community confidence through our crowd score, which is gathered from a selected pool of external rating analysts. We believe we provide a unique solution to a growing problem.
So quickly, some parting thoughts that I think are very important for this presentation. Again, I can't emphasize enough, this is happening now, and some of the companies that you see here on your right, Google, Facebook, Microsoft, Amazon, are all taking advantage. Facebook is coming out with a digital wallet, I believe in December or early 2022, called Novi. So without saying, I am absolutely convinced that blockchain will be essential to every business the same way the internet and wireless are essential to every business today. You just can't operate without it. That being said, only half of 1% of the world's population is using blockchain technology today. So if there was a time to get involved, I'd certainly say it's now. Blockchain technology to utilize properly is 100% inclusive without bias. And it's one of my favorite presentations to give, explaining exactly how that works. But it crosses borders, it cancels discrimination, and people can get loans today that were unable to get loans in the past. Some local news for me, crypto.com is the new name of the Staples Center where the Lakers play. I thought this was really bringing cryptocurrency into the mainstream. Crypto.com is one of the world's largest and I think best crypto exchanges that I use every single day. And just to summarize and to really end this journey, I want to be able to help you with yours. We'd like to help if you want to buy a cryptocurrency, if you want to streamline your business, or have a public offering all the way to ratings and advisory. We'd love to help. And with that, I believe we're about ready for questions. And I think everyone will be getting a copy of this presentation, which includes our business cards for you to contact us if you would like.
So thank you, Greg. Thank you, Bonnie, and thank you, Zev. We will absolutely have this recorded, and we will also send out as a follow-up everyone's business information, all their business cards. So please, no one has to worry to copy any of the information down. It will come into your inbox. This has been amazingly informative, and I already see several questions. If you want to send questions, please do so to the Q&A. We will spend the next 10 to 15 minutes taking answers to these questions, and other questions that you might have, you will be able to address directly to the panelists. I'll start with the first one. Besides for regulatory issues, what else could cause Bitcoin to crash, if anything?
I'm happy to start with that one. Obviously, regulatory issues are a big concern. However, with such a global system, you really would need countries to stand side by side against Bitcoin, and I don't see that happening. Another potential threat are general cyber attacks and technological risks. However, that risk continues to diminish as the protocol and system grows over time. And then perhaps the most practical risk to Bitcoin specifically is just the success of another token. Anybody can actually create a token. And so if there was a more superior token in the form of transaction throughput or scalability or other security aspects, and it also was able to achieve a similar or better level of adoption, that could unseat Bitcoin long term, I think you would see that migration as that other token increases in market value over time. But I don't see a risk that would, for example, cause a 90% hit to Bitcoin tomorrow. I do see that there are risks to potentially better technologies, but at some point, if Bitcoin is able to, well, and really has achieved a level of scale unlike any other blockchain and a level of adoption, that is really hard to compete against.
Thank you. Will the bank offer the same account balance protection for the digital assets as for the dollar assets?
That's a great question. I think there were a couple along those lines. And so crypto assets, should be clear, are not FDIC insured. FDIC insurance covers US dollar balances held in a bank. However, Avanti was specifically designed to provide digital asset services. And importantly, the bank is a non-lending bank. So we do not participate in fractional lending. We do not do loans. We do not have a mortgage business because we do not want to introduce that risk to our customers. FDIC insurance namely protects banks from exactly that risk. And so we just do not participate in those activities. And then in addition to just the structure of Avanti, we do also offer and will offer insurance for investors that want additional protection. But of course, that comes at a cost. And so practically speaking, most customers and institutions do not pay for insurance because they do get comfortable with the technology and operational risk.
Thank you. One of the questions that came in, and it is something that I've heard addressed before on crypto, is the carbon footprint and mining cryptocurrency and how the industry is going to address this.
I'd love to share a thought, and it looks like Greg has some as well, but a couple high-level responses, and there are good arguments on both sides. One is that energy consumption is not equivalent to carbon emissions. For example, 1 unit of hydro energy will have much less environmental impact than the same unit of coal-powered energy. And there are a lot of studies that show that the majority of Bitcoin mining is actually carbon neutral. The second comment is that Bitcoin can use energy that other industries can't, meaning that Bitcoin uses energy that would have otherwise gone to waste because the plants do not need to be located near its end users. Bitcoin mining facilities can essentially be anywhere in the world. And so you can locate them next to specific plants or power sources that would otherwise go unused. And you might hear an argument that the Bitcoin uses the same energy as small countries like Sweden, which is a lot of energy. But the practical question is, how much energy should a monetary system use? I mean, if you think of this as a fad that is going to go away in a couple of years, of course, that's a lot of energy. if this is a new global monetary system that is safe and secure and transparent for everyone on this planet, well, I think that's a pretty reasonable cost. So just wanted to add those few comments there.
Greg, did you have something you wanted to add?
Sure. The other part I would add is that Bitcoin is one cryptocurrency, and it's getting more energy efficient all the time. What other cryptocurrencies actually do is a completely different mining procedure, or even mining at all, where they can be energy efficient or carbon positive types of mining, where you can earn coins for being carbon efficient, and that market is growing at a great pace as well today.
And to the fact that, sorry, Kenny, I was just going to add on the energy question that it's a large industry, this crypto industry, right? It's $2.6 trillion, right? Said people are very motivated to get this energy question answered. I mean, El Salvador is looking into using volcanic energy to mine. So I think with this much money in the industry, they're going to come up with an answer to that question.
Thank you. We had a few people who asked if something goes wrong with the blockchain or anything related, where and who does one go to redress the problem?
You want me to take it? So interesting. The first thing is most blockchains, there's no one to go to. This is not owned. This isn't a corporation. This is just technology, which is obviously very different from if your Microsoft or if your Apple operating system crashes, you have someone to call. The good part about this and the way it's secure that it won't crash down is it can only crash down if the internet itself crashes down. So this is as secure as the internet is itself. It's on a distributed network so that you're sharing all resources and all data across, Zev says thousands, it could be hundreds of thousands or soon to be millions of users all over the world. So there is no single point of failure and it is redundant a million times over. So it's not a big concern in the industry from a standpoint of security or point of failure.
If you're going to build a utility token project on an existing blockchain, which would you pick and why?
On a utility, it really, and I saw a question coming up that pertains to this as well. There are so many blockchains out there now, and they're constantly being built. And I don't think it's saturating the market. I think it's adding to the market. The one thing great about this industry, the more users, the more value, the more secure, and the faster it can go. You're adding to the network, you're adding features and nodes to the network, which is a great thing. As far as, I'm sorry, utility token, can you repeat that again, please? I lost track of the second half of that question.
No, the underlying, I'm sorry, I'm sorry, I'm just looking back for the question because I went on to the other one as well, and I think I erased. I'm sorry, because I also have lost the, I think I erased.
Greg, I would think that it would be Ethereum, or I know you're a huge fan of Cardano.
Right, I'm sorry. Which one would you use was the question. Blockchains are getting very, very specific. So Bitcoin the first, Ethereum the most general, where most smart contracts and businesses are being built today. But again, there's new blockchains every day. Cardano, Polkadot. There's all kinds of blockchains coming out for very specific reasons, and it's constantly changing and being reevaluated every day. If you were going to start a business today, we would dive in to understand your business completely and then discuss which blockchains would be most suitable.
This seems to be recurring also. The question is, what is the underlying collateral or crypto, unlike currencies that have the sovereignty guarantee or gold? It's not backed by any guarantor? That's the question.
I would say it's the collective shared value that the Bitcoin blockchain is an appropriate mechanism for the store and transfer of value, right? Not to get too anarchist on this call, but what is backing the U.S. dollar? The faith that the government will print more, right? And if you have too much inflation and you have hyperinflation, what happens in Zimbabwe and Venezuela and other countries. And so it's a shared vision into the security of blockchain and honestly a new monetary system. And at the end of the day, something is only worth what someone wants to pay for it. And so that's really driven Bitcoin's growth over the last 10 or so years.
If cryptocurrencies like Bitcoin become used on a large scale, someone is asking about what will happen to the US dollar. Will the US government be forced to shut down Bitcoin like China did?
Go ahead, Greg. I see.
That's anyone's question.
Sure. The first thing is to clear up China. China is one of the world's leading utilizers of cryptocurrency. They were not shut down. They did stop mining, which was the energy intensive piece of it. I don't think it's going to be stopped forever. Things are always changing in China, but I can promise you right now, China is absolutely not shut down. It's next to impossible to shut down the blockchain because it is the internet. So if they're going to shut down blockchain, they would have to shut down the internet. And they don't want to. China is utilizing blockchain all over their country. They're having a great results from using it, and they won't. Was that the whole question?
There was the piece about Bitcoin and US dollars. Go ahead.
Go ahead. You can take it.
Yeah, I was just going to say that there are different, schools of thought on this. I certainly see a world where the US dollar and Bitcoin coexist. There are certainly folks that think Bitcoin is going to become the #1 world's reserve currency, and we'll find out over time. I wish I knew.
This is a question also that's come up several times. What is the source of funds for Bitcoin miner compensation?
So it actually comes into the concept of the blocks of transactions that are verified. And so it's broken out into 2 components. Every miner, so the miner that wins that problem for that 10-minute block of transactions, is compensated with a base reward of Bitcoin plus a certain number of Bitcoin per all of the transactions that happened in that block. And so part of it is newly minted Bitcoin, right? So right now in circulation, we have about 18 or 19 million of Bitcoin fully minted and in circulation. Remember, with a max of 21 million coins, which will all be outstanding, I think, in about 100 or 150 years based off of the distribution and release schedule. And then the other is simply just fees from the transactions themselves. And so if 1,000 people all send $100 of Bitcoin, maybe 10 cents of each transaction actually ends up going to that miner that won that set of problems for that block.
How widespread is blockchain's use in real estate transactions at this point?
Well, that's a hard question to answer. I can only tell you the pace is constantly picking up. This is it's one of the first industries that blockchain is really transforming. And when we get a chance to show you the difference between how a real estate transaction starts and how it ends, or how it is today, you'll get that same excitement. It's really hard to put a number on any of this stuff. Even when Bonnie talked about, and I talked about how many cryptocurrencies there were out there, this is as of a week ago, and it's changed today, and it's going to change again. Constantly growing. This marketplace is in a serious uptick, and real estate is one of the industries taking most advantage of it.
We are almost out of time. I really want to thank all of the panelists once again, Zev, Bonnie, and Greg. We really do all appreciate your coming on today. I want to thank all those of you who have joined us. I remind you that you will receive all the information. There were other questions that came into the queue, and I'm sorry that we couldn't get to every one of them. I also will remind you that this entire program was brought to you through the Ramaz School. If people would like to, we will figure out a way with Zev, Bonnie, and Greg to accept Bitcoin for your end-of-year donations. We would love to have continued support on the part of everyone for these programs, and we do appreciate you just coming on and being a part of it with us. We wish everyone a very happy Thanksgiving and the Chanukah Sameach. We will actually be having a program on pediatric use for the vaccine with 3 very renowned pediatricians coming on next week. So please keep your emails open to see that. And we again thank you for being on today and look forward to seeing you again very soon. Take care and have a great afternoon.
Thank you.
Happy Thanksgiving, everyone. Thank you.
Happy Thanksgiving.